Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We're sitting here recording Saturday afternoon. My name is Ben Maldonado, and as always, I am here with my partner, Barrie Hederachi. Hey, Barrie, how you doing?
Doing pretty well. Can't complain.
Yeah, typical bear market action the week, huh?
Yeah, I think so.
Rallies fail, and when they start selling again, they really sell it.
Exactly. Just keep going. Yeah.
Yeah. So, as we always do, we'll start off with Bitcoin, which is a de facto proxy for risk that I've kind of picked up on.
Which also looks like it's in a bear market.
Yeah, it sure does. And we were talking last week that, hey, that's promising. It looks like if we can stay above on the pullback, if we can stay above this 41.8 level, that, maybe we could get something going to the upside. Well, it looked good for 3 or 4 days. We held it, made a little push up, and then Thursday, Friday, bam, bam, down below.
Mm-hmm.
Not only did we get below the important full square there, we broke a trend line. And much like here, the longer we hang out below this, the more number of bars that we get under this, the more risk there is that we're going to get a sharp sell-off. So it's not, the bull case is not completely dead, but it needs to get back above this full square and fast, or else gravity is going to take over, and we're going to be, testing these lows in this half square, which is around 32.8, 32.9. By the way, all the levels that we discuss will be in this spreadsheet that we have. We post links to that. The spreadsheet's updated, and you can check it out and see any levels. Also, when you go to our page, make sure you like, subscribe, ring the bell, do everything YouTube wants you to do, so that we know that the content is useful. Where are you on Bitcoin, Barrie?
I'm of sort of divided mind here, because I haven't been that bullish for a while.
Mm-hmm.
And I haven't really been bearish either. So I've been kind of watching on sidelines here, trying to see where the traction is going to come in. And I thought that one square would give us some traction, and it's not doing it. But where I'm noticing traction is if you take that full square line and you go down 1.8, where the lows came in on Friday and today, right there. And if you go to the left, you can see, we had September lows there, and
June highs, May, June highs, yeah.
That's right. And the January lows came in there, September lows, and then sort of February highs. So it's not a bad spot. I think it's proven to hold in the past. And your cycle is still valid. If you look at your cycle, the 70-day 140, if you look at the one that came in last June, look at the pullback. It almost made a double bottom before it took off, got some traction. So it's possible we screw around, but that doesn't mean the cycle is off.
It's a good point. It's a very good point.
But I think for this round, the key level here is that line that 1/8 line. For me, if it can hold that, then I think we can probably clear it and do something with it.
That's around 39.6.
Right. I think that's kind of critical. Just because the fact that we came right to it, and we've been there before. So
it certainly looks like it's a balance point.
Yeah, you can see when we broke through it in February, we couldn't do it, sort of grinding. We just had to just pop through it hard, and we came back and we break right on that line really hard. So it seems like a key line to watch, level to watch, and we'll see. But for now, yeah, I'm not all that bullish till we can clear the full square. But I'm looking at the 1/8 to be sort of a secondary marker, right?
We're gonna both look at gold, and we talked before the show, we talked during the week all the time. I want you to repeat what you said about Bitcoin and gold, because I think it's really valuable.
Well, about when it push comes to shove, gold took off.
Like when they're about to fire bullets and drop missiles, drop bombs, gold took off and Bitcoin couldn't.
Yeah, very interesting, right? It's so all the theory and the theory is one thing. When it comes to practical applications, is another thing. So
Right. The I guess the demise of gold, by according to all the Bitcoiners, may be a bit premature.
Yeah.
Let's jump over and review the big five with you, and then you can kick it back to me, and we got a few commodities to cover. Really having trouble getting over that box, isn't it?
Yeah, it's having a lot of trouble. All kinds of trouble. Well, this and the Nasdaq. So, and we were kind of expecting it, not really looking for a new bull market here at this point. So, anyway, we're kind of going by these markers, the levels that we talked about last week. We left you with two levels. One was 4370. We wanted to see if the market could hold that, and to be able to hold any rallies above 44.5. And we couldn't hold 44.5. And the reason for that was about 50% of the square, right? It comes in right about 44.50. And the idea being the market was really firm and money was really behind it, then we ought to be able to hold that. That's normally the pattern characteristic of the market working through these squares. And we just got in there for one day. Next day took out the low of the we took out the low of the high bar, and that was that. And then we just came right straight down to 4370. You see that bar.
The low held it there.
Low held it there till Friday, little, counter trend, and then we just got right through it. So going for next week, it's looking weak, and I think we have to watch this. We talk about this in terms of short-term trading. So if you follow this weekly, we take these levels and we want to sort of use them to map out the possibilities of the market turning, or using them as a way to frame the structure, so we know which side to trade. So 4370 clearly is still a really important number for next week. If we can clear that, then I think we might be done with all the selling for a little while. If we can't clear 4370, especially, we talk, maybe are we open? Is the Globex open Sunday?
Sunday night, yeah, futures.
Sunday night for a bit. Okay, so if we can hold up here Sunday and maybe a little bit on the Monday partial open and going into Tuesday, I would say we're in pretty good shape, because this low is fairly good. It's funny, it came right on the trend line, which we've had on there for months. So it's kind of an important level, and it's 2/3 of the square down. So it's a 60 degrees down. And I feel like it's good enough to hold, but I'm going to drop a few extra levels than we normally do, just to be able to frame this in a way that's not too confusing. If we slip through the low on Friday, I think like 42.25 area becomes the next support. And that's very close to the old low. And it looks like, if you look back, it looks like it's a decent support area. And we could go there, but here's the difference. This time, if we go there, if we can't really hold above it or recover quickly after a false break here, then I think we could be down for a while. So it's just going to catch a sort of a slippery spot.
It's a big air pocket, like almost down to 4,000, isn't it?
Right. And on the way, if you want a sort of another confirmation, I think 42.90 level is the one to watch. So,
it's funny. I was saying watch 42.95 level for confirmation that the downtrend's continuing.
Yeah, there's a bunch of stuff there. So basically, we're watching. If we can get above 43.70 right away, all right, no problem. Lows are good. We can look to trade the long side above that 43.70. If we can't make that, and let's say we rally to 43.70 and we fail, then I think 42.90 is the next level. About 80 points lower. And if that slides, then 42.25, 42, I'd say 42.20 give or take 5 points. That's kind of where it is, pretty close to these lows. I just want to keep it simple and clean.
Mm-hmm.
Do you have anything to add to that, Ben?
No, just that that 42.95 level is important for me. It's looking weak, and if it doesn't get going pretty early in the week to the upside, you got to feel like the bears are going to press.
Mm-hmm. And even if we do a little Gartley to finish this up, I mean, that'll get us down into 42.50. That'd be the ABCD down if nothing else happens. So that's something to also keep in mind. That's it. Let's take a look at the weekly.
Mm-hmm.
See what's happening. Well, last week the week before, I didn't talk much. I just said, hey, look, even if this is no matter what, we only had a 1 bar pullback counter trend, and we're straight back down to coming down. So this, this pattern really makes it sort of a case for lower prices to come. Given that we keep forgetting how the high came in. This thing came in at a huge cycles expired up here. And we didn't make a big deal about it, I don't think, since we always talk about these things kind of in a casual sense.
Right.
We did probably had some lights and things flashing, but but anyway,
fireworks going off.
Yeah, just to kind of say, but we did talk about it at the high. So we can't forget that. Sometimes what happens, we start looking at this analysis, we start going week to week, and we forget, like, hey, where do we, how did we get here? So this high was fairly good for a cycle high when it came in. We talked about it. You guys can go back and check the videos around that time. And so for the week, this move to just top here and not really recover quickly would be telling us a story about further weakness. And about the blue boxes, if you guys missed it a couple of weeks ago, it was just, I just boxed up like a normal corrections on the weekly chart. And, these two matched up, and even the big, the COVID sell-off was basically very close to two boxes. So, so that being said, we could have done that, and we still had room to go and, sort of do a false break before we try to mount another rally. But the fact that we're delaying, 1 bar counter trend, and then we just couldn't even hold above the low of that high bar. To me, this is, showing some long-term weakness. So we got to keep that in mind, even though we cover once a week and we're looking at the shorter term trend. This is not looking that strong at this point.
Bigger picture is not bullish. There's no doubt about it.
Yeah. And so, we need to look at that. Keep that in mind anyway.
And when we do the monthlies, we cover that, and that was pretty evident both on NQs and ES that the monthlies were not bullish.
Exactly. And if you guys haven't seen those, there's a playlist for all the monthly reviews that we do once a month. Check it out. Mm-hmm. And those are the numbers, and like Ben said, they'll be up on the spreadsheet for you guys to check out. What else we got here? Well, this is the calendar day chart with the square at 90. And the reason I said if that low holds, it's okay. If it doesn't, then we're probably going to go check these old lows, is because it is 60 degrees down from the high, and that 60s played, the 1/3 played a big role in this in the last few weeks. So if that holds, then we can maybe go back and check the other upper third of the square.
Your 45-day timing was excellent there.
Yeah, that high to high worked out fairly well and hard. So that means, that those cycles are in play. And that's why I wouldn't call this low right away, because, that force is still there, and we are that turned down. And well, the other thing is I'm thinking it's a short week, and if we can't really recover that 43.70, right away, we could be down into the end of the, right into the end of the month. So that's something to keep in mind. So, you got to tread carefully here. Looking at the bigger picture for support resistance levels, looking at the square 72 coming off of COVID lows, the big half square, if you just eyeball this, you can see the structure is really at this level, which is, right around 42. And so we can keep that in mind as we go. So there are levels as we come down right into here for around 42, 42.10, 42.15, 20. So those are all sort of a zone. You can block that out just to see what happens. Okay, let's move on to, and are you covering bonds today?
No.
No, okay. But we talked about it a little bit earlier.
We did.
And well, we've been bearish for a while. And the key level to watch next week would be the 53.19, which just happens to be, where the old low was, and that's not how it's really derived, but it's interesting it falls there. So that's going to be a key level to watch.
Key spot.
Key spot. And if it gets above that by more than, let's say 5 or 6 ticks, then we might have a reasonable low here. We'll see how far the counter trend goes. But going by the book, this is not done yet. I think we should see a low around 49 at least to come and tap this square 72 to complete the cycle. So far as I'm concerned, this is still in a fairly strong downtrend. So I'll draw that trend line in there. Let's see what happens. And 43.19 is the level to watch for next week. Support wise, it's 49 on the way down. Weekly bonds. Well, I'll just keep it simple here. We have a trend line, weekly trend line. I think long as we're below that, counter trends can be sold, and it's on the bearish side. I thought we could do a false break here, but we really didn't. We sliced right through it. So that tells me the false break scenario is out for now. And it's holding the trend line. And as far as the weekly goes, hey, the full square is way down here. So
still more downside in your work.
Well, if from the square 90 perspective. But if you look at the 72, look at that, Ben.
When we were talking about bonds beforehand, and I was saying how I think we have a low on a shorter time frame.
Right.
And that's interesting that your 72 picks it up on the daily.
Yeah, and can't really ignore the 72, so it picks it up fairly well. So you got to watch this very close now.
And my call is not, when we were talking also, was not like, oh, it's a new bull market in bonds. It's, some sort of counter trend, flight to quality, flight to safety thing that I was seeing in looking at the 20 different markets, 20 plus markets I watch. It looked like there was some flight to quality and flight to safety.
Right. So on weekly basis, we still have this big zone of resistance up here below. We can say 159, 57 to 59 areas a big on a weekly basis. That's a big resistance. So we did tap this. We did have a nice push back up. So we'll see how that goes. On these kinds of moves, I'd like to see what the daily. I'd like to see the daily squaring out in some way. And we didn't quite get that. So, right. That's why I'm a little hesitant to call that a low in bonds for now.
Sure. I think it's part of what I was seeing when I was calling the war trade, which I'll talk about in my segment, but bonds are like a safe haven. And I think that's kind of what it was a part of, watching the flows throughout the week and how they, manifested on the charts. It looked like part of a war trade, this buying of bonds.
Yeah, that's possible, right? Either way, this 53.19 is the level to watch. If we can recover that quickly or not for next week.
And I also think if we get a nice bounce in bonds up into resistance, man, it's a hell of a short setting up bigger picture.
If it sets up well, yes, somewhere in there. Yeah, exactly. So
we can watch that.
Right. Moving on to crude. We talked about 97 being the target for this week or last week. And we got to 97, almost 97, really close.
Right. 96 and change, I think, right? 96, 80 something.
Yeah, 96, 80 something. So, 96, 80 something. So, 96, 80 something. Yeah, 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 96, 80 something. So I'm calling that, like we got there. I'm calling that we hit it.
Sure.
Close enough on the square 90. You can see 60 is right there.
Mm-hmm.
And I think we did, what did we do? We do 72 calendar days up into this high.
Mm-hmm.
So there's enough there. I think we hit some major resistance, and we should ideally hold above this 85 level on any kind of a counter trend if we're going to continue higher. So I'm expecting any counter trend to hold above 85. But this 97 should hold for a while. And the reason is not just the 60 up here, but we looked at the weekly last week's show, and I pointed out this 90 degrees up off the 2020 lows.
Mm-hmm.
And we did hit that 90 there we did hit it. So
Yeah.
So for me, that leg is, there's a very high probability that leg is done.
Yeah, and I think it as also as part of the war trade, Barry, crude is in there. So that may be preventing a bigger reaction down like you normally see at the end of a cycle.
That's a very good point.
And so I don't think your cycles are off. I think, the geometry's there. It just may be muted reaction down now because, people think, if they go to war, the price of oil is going to skyrocket. So there's a unnatural bid that's in there now.
Yeah, it's possible. And we did have 3 drives that we talked about.
Mm-hmm.
Actually, 4 drives, if you really think about it, but 3 drives, Let's say. So I'm not looking for crude. We've been bullish crude this entire period, last 90 weeks. So
right.
I would say for now, we're expecting it to hold above 85. And until we can sort of clear 97 in a big way, you can see why it's, it wouldn't move much higher, because of the score at 90 there. We have 90 degrees up, so that should cap it. So we should be stuck between it's 85 and let's just say 97. That's the range. So we could be range bound for a little while. Go ahead, Ben.
I would say my summary on crude is I wouldn't short it because of the event risk, but I wouldn't buy it because of the geometry in the cycle.
Yeah, it's a little bit of a trick right now.
Yeah.
Yep.
No real edge, no real favorable risk reward on either side of that trade right now.
Exactly. Unless you want to day trade it in between.
That's right.
Between the lines, right?
Mm-hmm.
So this is kind of a big event here. The fact that we reached the 90-degree point. Let's move on to gold. Yay.
Yeah, it's been the star performer last few weeks.
Well, it's basically did everything by the book. We expected a stronger market above this 1832. And then we talked about the half square being a key level to clear for really, sort of take off. And that was really sort of textbook because we broke out, came back to retest it and moved higher. So there's your sort of a classic hook, right? Classic pull back and retest and then go. So now, the next level that's been up on this chart forever is 1950. And I don't think we have to really readjust it. Let me see what the
other thing that chart beautifully demonstrates is that series of higher lows and how it really gives you a clue over, months and months of higher lows that it's just waiting to explode higher at some point.
Yeah, exactly. And we kept talking about that, right? Look, this is not bearish. It's making higher lows. It's holding the levels and very textbook-like. So it's eventually, finally we got the little bit of a leg that we wanted. So that's fine.
Right.
Or we were expecting, I should say.
Mm-hmm.
And one other thing is that it's really running this 60-degree lines. If you can, you can see. Well, let me turn it on.
Mm-hmm.
I don't know if that's going to help much. Well, let me make this a square of 60. That'll make it. There you go. Well, you can see how, the first leg was 60 by 60 right here.
Perfect.
And it was very good. And then we had an ABC down correction, right? Higher, low. And then from here, we started the run up, after this correction off the first square. So 60 has been running. We had a 180 up here. So that's three squares out.
It
So
took off at
price and
240.
time-wise-
Took off at 240. You see the acceleration at 240?
Yeah. And we had a chance to turn down there. We didn't. So we're back up. Well, just to say that this 60, that's where I got this 1915. So that's the 60 up. Anyway, just to say that, I mean, that 1915 is the target. It's been a target for a while. And if we can clear that swiftly, I would say, then, we should see 1950 to 2000 should be the next move up, the next resistance up above this level, above where we are.
Now gold looks good.
Yeah, gold looks okay. Finally. All right, so here's our weekly chart that we've been meddling with for months. And we've been talking about this triangle practically, every week.
Every week.
So, here we are. Hey, finally, we're
Got a weekly close outside of it.
got a weekly close outside. So this is good. Now, let's just see. I think gold would be just fun to have a nice rally, just because it's been so dead for so long, if for nothing else.
Generally how it works, isn't it?
Yeah. And
Get
we
everybody
talk about that
frustrated.
last week. Just when you get bored, that's when it's going to move.
Just when you get frustrated and bored and look elsewhere, then it goes.
I think we said that last week.
No question.
Anyway, I had this box drawn out, I think last November, and that's sort of the heavy resistance zone from a few different angles, and we really were able to clear that. So now, any pullback holding above, this 1880 area basis, the weekly, I think gold's going to be in a strong position. And if we're going to do a little fake out like these other times, then watch this 1880 level to be not held, and we kind of sleep off of there. But we can hold above that, and especially this zone here, I think gold's in a strong position. As far as the box zone goes, it's like 1868, to 1890. So that's kind of the zone of the box. We haven't looked at these squares in a while.
That one has the timing down.
This one's pretty good.
Yep.
Pretty good. So big square up here. I think I don't know if we were doing the show back then, but we did catch that. Well, naturally, if we can clear this 1881 and kind of hold on a weekly basis, we ought to hit 2000. I mean, that would just make sense coming off these lows. Seems like that would be the natural spot to go.
I agree.
So we'll have to wait and see how that goes. And coming off the low. So here's another interesting thing, right? We are clearing
The full square.
the 104 degrees up, which is 2 weekly squares. And that's a big deal.
That is a big
That's
deal.
why this 1881 came in.
Big deal.
So it's really important that we can hold above this, then that's why 2000 is not that far. It's just a couple of weeks.
No, I think we'll see new highs if we hold it with all
And
the
even
energy.
going further, forgetting all this war stuff, holding above this 1880 level is a big deal, especially since this is a very bullish sort of a coil consolidation right below that square, looking into the next year or two.
That's right. No, that's a lot of energy, a lot of compressed energy in that coil that's going to be released, and that's being released.
And it's funny, sometimes you can't tell which way the triangle is going to break, but we've been calling the upside just because it's the way the squares are laid out. So hopefully we'll continue, but 1881 is the level to watch basis weekly. And here's the dollar. Not much. We expected it
It's
to
been
hold
muted,
above.
hasn't it?
Pardon me?
The action's been muted in the dollar last couple of weeks.
Yeah, and if you look, if we go back to our box scenario, here we are, right there.
Yep. No question.
So, and all the currencies, that's why they're all just jammed up sideways and not much going on. But we were looking for it to hold about 95 because it is 50% of the square of 90.
Mhm.
And it's held it fairly well. We drew up a little trend line last week, and or the week, maybe the week before. But anyway, it's holding. So the dollar looks stable for now, right?
Mhm. Yep.
And I'm guessing it's going to be range bound for a while. But 95 is a key level to watch. Upside, the 1/3 of the square, 2/3 was 97, and that was one of our targets. And again, you can see here we couldn't hold above that 97. So here's a correction. So maybe the second time's the chance to get through. We'll have to wait and see. For now, we're in this, so be aware. We're in this
Chop zone.
big chop zone. There's no question about it. And looking at the weekly, maybe it's time to replace this fork. Pretty much done. Big battle at the fork line.
No question.
Again, the level to watch here is 95 because that's 50% of the square coming off the low in 2021. And we held above it. So, dollar is fully, it's bullish, just sort of consolidating here. Not much to do for now. Just watch it at 95 because that's the key level. As long as it's above that, it should be bouncing to the upside.
Mhm. Looks like wave 4 type mess.
You just have to be careful. You saw the bigger picture, right? It's all sideways. So,
Yep.
but very steep. It's almost doing a 1 by 1 up. It's on a steep angle. It's strong. So this is kind of a consolidation.
It's bullish for sure. Yeah.
Yeah. So I think the consolidation is okay. It's all fine for now. Might as well look at the weekly euro. So the big resistance was that 50% of the square. It's been for a while. And so that's around 150. We're looking for weaker conditions below that. And the support came in around the 1/3, about 30 degrees up. So maybe it's time to bracket that one too. So there's the chop. Be aware, not much opportunity here for now, other than to know where the boundaries are.
Yeah, if we can't get can't get above that half square, it's going to have another leg down.
Yeah, especially if the 1/3 goes. Right?
Yep. That's the boundaries.
Mm-hmm. And looking at the daily, again, pretty much the same picture. We're back in the chop zone. Not much to do here other than watch it go sideways.
Agreed.
What else we have here? Not much. That's it. I think I'm done.
Okay.
Let's go back to you. Cover the commodities.
Good job covering the big 5.
Thanks, Ben.
When I do the full review of everything we cover, like the charts tell a story. I hear what they're saying. I can sort of see where's money flowing and what's happening. And the story this week, in some weeks the story is not much changed or there's a big change, right? And this week the story was the war trade. It was weak equities, weak Bitcoin, strong bonds,
right,
strong gold, strong silver, strong crude, and interestingly enough, strong wheat. And you and I were talking about this as soon as the Ukraine thing came up. We were like, why is wheat strong? I see why the others are, generally safe havens and the reactions to, what would happen if a war broke out, but why wheat? And so then I did some digging, and Ukraine is the world's 5th largest exporter of wheat.
There you go.
And there's the reason why. So that's kind of how the story this week, based on the charts, was a strong wheat, strong bonds, strong gold, strong silver, strong crude, and everything else looks like it was either correcting, chopping, just a mess. Not like no edge, no real trend going on. So let's start with NQ, which I think is, another good proxy along with Bitcoin for risk in this cycle that we saw. And this looks weak. The key thing this past week is, we were above, there you got Friday, Thursday, Wednesday, Tuesday, Monday. We got previous 2 weeks ago, we got above the half square, tested the full square. And we said, okay, look, if we can stand, if we can hold above this half square, we got a shot, at getting through maybe the second time. Well, not only did we not even make it up to test it this last time, and we made a lower high than here where we did test it, we couldn't hold the half square. Came down, pulled back, tested it again for 3 days, couldn't hold it, and now we're right back down at the bottom, of the full square here. So if we lose this is almost certainly gone, and we're going to be heading down here, and that's about 13,300, 13,400. So this is in a weak position. We held here, so we do have a shot. But if Globex Sunday night, or when we start trading again Tuesday, if we get stuck under this, it could be this again. You get stuck under, the pressures to the downside. So we are in a weak position. Got to hold this full square, which is in the 14,000 area. If we hold that, we got a shot. And if we lose it and get stuck under it, the risk off in the tech stocks and NASDAQ continues. So I think it doesn't take a master technician to see what's happening here. We're making lower lows and lower highs, a series of them, right? Even on the retrace here. So we put these lows in, we go up, lower high, push up again, lower high, push up again, lower high. That's not bullish. The sellers are stepping up and selling at, consistently lower levels. So we really, really have to watch this market and this 14,000 level, because that, to me, that's key. What are you seeing in the tech stocks, Barrie?
Well, I'm seeing money leaving tech stocks and going into commodities. So, and under whatever cover we want to call it, be it the war or whatnot. And what's slowly happening is money shifting around. So commodities are going higher and stocks are moving lower. So I think we ought to keep an eye on that. It could be
very good point.
Could be around for a while. So
yeah, absolutely. I mean, bigger picture, the commodity bull looks like it's got 2 to 3 years left to run. So let's go to one of the commodities we talked about many times. So here's wheat. What's really interesting about wheat is the grains generally move together. And wheat is kind of doing its own thing, which is, again, why, I came to the conclusion that it's part of this war trade or positioning for war that's going on due to Ukraine's, being, the 5th largest exporter of wheat in the world, because corn and soybeans are still in sort of correction mode. And this, they're making lower highs and lower lows and, struggling at resistance. And this, if you look, this is that pattern we always look for, which is, show me higher lows. There's 1, 2, 3, and then these, series of them, 1, 2, 3, 4 of them. Like somebody wants to own this. This past week, every time it got pushed down, they bought it up. They bought it up. They bought it up. So I don't know how sustainable it is. I don't know how long they're going to be buying the wheat, if there is a war, if there isn't a war, or what. But the chart is saying somebody's accumulating wheat, and it's going counter sort of to the prevailing trend, which is more of a consolidation or correction in corn and soybeans. I know we talked about wheat this week. What are your thoughts, Barry?
I think these things are just getting started. So it's good to watch these and get in, when we get the correct pullbacks to get positioned for the longer term. And, earlier we've been bullish commodities for a while. And now that the market kind of topped and really couldn't, looks like we're going, we have more downside left. I think it's time to really focus on commodities and take it seriously.
It's time to pay attention if you haven't been,
yeah.
because money is coming into the space. There's no question about that.
Mm-hmm.
Let's look at gold. Barry covered gold. I just want to show a couple things because it's germane to one of the things we're going to cover at the end. We had this big daily triangle. You can see the pattern coming into this move was really frustrating everybody as we wound up tighter and tighter. We got the move on a breakout, and then we got that retest, right? That retest of the breakout of the triangle, and then it took off. That's a pattern that repeats over and over again in many different markets, and we'll see it later in one of the ones we're seeing if it's going to actually hold in a different market. But gold is bullish. Barry covered it. I just wanted to show it specifically for that check back it made. The next big level in my work is this, 1925 area, which is not far off from your, I think, what are you, 1915? Mm-hmm. 1915 area, not far off. Yeah. So that's the half square here. Want to see if we can, punch through it, sit on top, and then we can go to the full square, which is, around 2016. So gold looks bullish. It's doing the right thing since it broke out. Next big sort of level that we're going to watch is this 1925 to see what kind of reaction we get there. Gold's little brother that always likes to tag along is silver. And silver, again, you look at this and you say, oh, it's in the triangle. Why are you even pointing it out? I like to get in these things early. I like to be in position when the odds favor a breakout's going to happen. And what we've seen in silver is that same pattern, higher lows. And then recently they're stepping up the buying, right? They were letting it come back and test the older lows or get closer. The buying's picking up. And if you look at this bar here, they couldn't even get below the full square. And that's always a bullish sign in my book where, we don't get like part of the bar above and part below. That's a full bar above. So silver may be on accelerating. I expect, odds favor right now that we break out of this triangle and we go up and we test the half square here, which is around 25. We get on top of that. Then the next level we're looking at is, 2670, 2675. I like silver. I think it's sort of turbocharged gold when it really gets moving, and with gold moving, silver generally follows. So I'm very bullish on silver. What are your thoughts on silver here, Barry?
Well, it's lagging a little behind gold, but it's on the up and up. We'll have to wait till that trend line breaks, I think, for gold. And for the long run, I would say that half square is really the level to watch. Mm-hmm. After that, it could maybe go a little faster.
Yeah, it definitely is like turbocharged gold when it's moving. Mm-hmm. So let's go to the next one. Actually, it's the last one. A short list today.
Well, short week next week.
So this is the one that we brought up a few weeks ago before the breakout, how it was bullish and things were moving and turning, and we had that pattern of higher lows. Well, we broke out nicely. We pulled back. We couldn't hold the full square, but notice where we ended up. And this is really important because you saw it in gold. As long as we can stay on top of this triangle breakout, stay on top of this triangle and don't like sort of push back into the middle of this triangle, this could be a bullish setup again for the next leg up, just like we saw in gold. So I'm watching cocoa very closely for that sort of resolution of what it's going to do here on this retest. Interestingly enough, the rest of the softs are all correcting and consolidating. coffee, cotton, sugar. They've all been weak or, sideways or chopped. So if cocoa can hold here and sort of regain its footing heading up, that would be a very, very bullish sign. If it comes back into the triangle, it means it's not ready, that it's moving more with the group and less on a individual supply demand basis. So we'll see. This week we should have that answer, and based on that answer, we'll know what we need to do with cocoa. Mm-hmm. I know you were liking cocoa too, Barrie. Where are you on that one?
Well, I think cocoa is sort of a, you have to, well, like most commodities, they trade well technically. So you just have to wait till you get to the correct levels and take your shot. So here we have one, and if we get through it, then it'll be the half square.
That's right.
And you got to take your shots where the odds are in your favor. So
that's it for the chart review for me. Everything else, as I said, is correcting, consolidating. It's just not in a position where, there's a substantial edge for us to catch a trending market. So, when that's the case, we just watch and we wait. What are you looking for specifically this week, Barrie? What are you watching most importantly?
Well, watching gold to see the continuation of that. Keeping an eye on crude to see if we can hold that 85, I think is important going forward. Mm-hmm. S&P, of course, really trying to see if we can, either we're going to rally and look for resistance up above, or if we break down, then I think we can expect probably, market going down into the end of the month. So either way, with these levels will tell us early on.
I'm going to watch the war trade. That's bonds, wheat, mm-hmm. gold, silver, crude. I'm going to watch all those because the headlines, one guy says one thing, another guy says another, this, that, but money talks in the market. And so by watching those, if crude's strong and wheat's strong and gold's strong and silver's strong and bonds are strong, it's pretty good. And equities are weak and Bitcoin is weak. There's a good chance that the war talk is real. If that groups are not doing that, or if they're not in rhythm that way, then it could just be a bunch of conjecture and a bunch of bullshit. So a way to kind of slice through that is to watch the price action in the market instead of what the news headlines are. So that's where I'm going to be focusing, and mm-hmm. hopefully we can continue to have good success with our levels and make sure risk rewards in our favor.
Yeah, and we have good volatility. We have little bit of movement, a little bit more movement now. So,
absolutely. Well, have a great week, everybody. Barrie, have a good week, and we'll talk soon.
Thanks, Ben. Thanks, everybody.
All right.
Have a good week.
Bye.
Bye-bye.